Good morning, everybody. Welcome to today's live stream. Let's define the daily pivots for Bitcoin first and foremost. We do have a new expansion over here, just from the trend continuation, but it's still important to define long-term trend. So we're going to start with that metric, okay? Starting off, we're looking at the 125 period, it looks like. So we'll pop that value in. Okay, 125. Awesome. So, as long as we are outside of this pivot here, Bitcoin is in a daily state of trend. And if you have a macro level trend, well, that's good. As long as we're above that pivot, Bitcoin will stay in a state of expansion, and expansion means trend. So, no reason to bet against trend until this green line is broken, right? It's just going to be the re-entry of this band here. And if we do re-enter that band, Bitcoin is going to need to compress, which means either lateral trading or a full retracement. However, that hasn't happened yet, so we're going to avoid talking about those bearish scenarios at this time. Okay, with that in mind, take a look at the 4-hour chart. We have a super obvious trend line on this formation, and I can't help feel it's going to be broken. We will see, it's probable at least, that we will see a volatility pop to the upside. Who knows how long it will last, but there will be a large green candle above this trend line. I'm guessing a lot of people are over leveraged attempting to short this pivot. That's fine. They're welcome to try and do so. However, it is important to note that the mean reversion condition associated with this downward move, right, the 225 period, is still technically active, which means that they are, correct in their short positions. So, they're right. This bearish condition is active. It is implied we need to go down to this mean. It's just all about finding proper entry. Our initial entry into this short condition was right here on our 1/10th period CCI roll down, and we are going to load that into this band. Awesome. Right, because it's the re-entry of the 1/10th period from above, which implies reversion, or at least the entry signal into the bearish condition. Okay, so with that in mind, our target is currently 9,600. Altcoins are operating extremely inverse to Bitcoin right now. Every percentage that Bitcoin goes up, altcoins go a percentage down. And one important way of defining altcoin strength is divergence in trend. And you can manage that pretty clearly on just about any altcoin. XRP comes immediately to mind. We're going to do so on the 1-hour chart. And we're going to hide our indicators and just compare it to a standard Bitcoin chart. Okay? So, one way you can determine altcoin strength is identifying altcoin divergence. Now, typically, for every percentage Bitcoin goes down, and this is acting really snappy, I'm going to change my settings here real quick. I just want maybe like a 7% margin on each side. Let's go for 15. All right, there we go. So, for every percent Bitcoin goes up, altcoins tend to go down, and of course the inverse is true. And honestly, these charts are just completely inverse. So, strength can easily be identified by doing the following. This works really anywhere. Let's take a look at the 15-minute chart. And this is awfully snappy. There you go. So for every percent... Oh, I have it to auto. No wonder. No, that didn't fix it. All right, well, I'm going to stop screwing with it and just show you what I want. So every time it goes down, up, up, down. And honestly, it's just extremely accurate as far as just the opposite goes. Strength occurs when you have divergence to the pattern, in which technically divergence to the pattern would just be exact correlation, wouldn't it? So in this scenario, Bitcoin ended up going up, but so did XRP. All right, that's technically strength. I have my eye on XRP now because I keep on using the word divergence. What I'm talking about is pattern divergence. Right, we are diverging from the pattern. It's not typical divergence in the sense that it's diverging from price. I mean, technically, this is the definition of divergence, opposite. It's the end of divergence that creates what we're looking for. However, we can say divergence from patterns to mean the same thing, so let's stop babbling over semantics and move on, okay? You can use this anywhere, on any altcoin. Higher caps are typically going to be more effective when you attempt this kind of thing, okay? Of course, this is only going to work on the Bitcoin pairing. If you attempt this on the USD pairing, then you're in for a ride, because it's not going to show you anything at all. All right, well, okay. I'm going to bite my tongue there. The percentile difference between the moves, right, where Bitcoin goes up but XRP goes down, aren't the same. So you actually do end up not getting a static line, right? Because if it was just truly opposite, the USD pairing would just be flat. So by looking at both of them through the perspective of the percentage difference, at least in that scenario, you can grab a solid understanding of how the divergence is actually happening, instead of it just being an added difference line. That's not particularly useful for what we're trying to do. Okay. So, as far as actual signals in the shorter time frames go for Bitcoin, I'll be honest. We have the daily trend and the 4-hour mean reversion condition, and then other than that, we're just technically in a state of high potential energy. If you look at the wave PM, we have all our values below 0.7, which implies high potential energy. Typically, when this signal happens, significant trend results. So let's find the last example on Bitcoin where every value ended up below 0.7. Okay, beautiful. Here. So this section, I'm going to guess significant trend followed shortly after. Right here. Well, significant trend as defined by the 1-hour chart. So typically, that's just, in this scenario, a 5% move. And a 5% move as defined by the 1-hour chart, well, that is at least a semblance of significant. Okay. So if we start to see expansion, obviously this, in hindsight, is going to be super obvious. But actually trying to trade this in real time does pose some difficulty because it requires a lot of initial babysitting, right? Because the initial start of expansion needs to be acted on within the first few minutes of it appearing. Otherwise, you miss the entire trade. So as far as this, like me calling something like this, of a state of high potential energy, it's not practical for the average trader because they can't sit there and wait for it. And it's not something you can easily set signals for either. So with that in mind, 15-minute chart might tell a different story. Who knows? Really, I don't see any active mean reversion conditions. 15-minute chart looks like chop to me. Okay. So 4 hours technically bearish, daily's technically bullish. 1 hour has high potential energy and will most likely result in a spike. If we have high potential energy, oh, this is interesting because we have the super obvious trend line, right? If price does, in fact, break up above in a state of high potential energy, that will result in a significant volatility pop to the upside, right? Just be aware that the 4-hour condition is still bearish. So, with that in mind, that's all I have to say today. It has been a pleasure. I'll talk to you folks later, tomorrow at 1 p.m. MST. Have a good one.